And once you get organized, you have a far more outlooking, forward-thinking, abundant perspective on your company. Where are we going? How are we getting there? And you're not living day-to-day operations, just, putting fires out, figuring it out. You still have that,
Sure.
but you have other people that can help with that. But no one is looking forward on your money but you as an owner.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Erica Meitz is the founder and owner of Bayshore Elite Gymnastics and the CEO of Maroon and Gold Investments. Erica, welcome to the show.
Hey, Sam, thanks for having me on.
Absolutely. Erica, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah. Gymnastics my whole life. Entrepreneur since I was 27 in the gymnastics field and still am currently. For the real estate, I had started my first single family rental in 2015 for $1,000 on a model home. And people just wanted to get out from underneath it. They carried the note for me. Made $80,000 on that sale. It was fun 5 years later. I know, isn't that a funsy conversation? Then I got a mentor up north in the border of Minnesota that is trying to offload his portfolio. And so I was 1031ing that money from California to Minnesota. And I met him and he offloaded some of his portfolio for me. And it was fun. And he's still a great friend today and has a whole bunch of stuff he still wants to offload, but he's not ready yet. And he has unique properties like cabins on the lake up in the North Country and things like that. And then in November, we jump into resort hospitality business.
Okay, you got your hands full, and these are a lot of things that I haven't really, in almost 800 episodes, haven't talked to anybody about cabins on the lake, things like that, especially not in northern Minnesota. Like when you say, hey, I got an awesome real estate investment for you, the thing that comes to mind is not northern Minnesota, which I know it's really, really pretty up there. It's also really, really cold for us Southerners. That's just, we don't venture that far north because it snows. But, outside of that, I want to hear what the opportunities are, how you saw them, things like that. But before we dig into the real estate side of things, let's talk maybe slightly about the gymnastics side.
Sure.
In the gymnastics business, you're in it at 27. I mean, what even is the gymnastics business?
So it's an amazing business. It is a fulfilling, non-widget producing kind of company. Right. So it's one of those companies that is very emotional driven and not revenue driven until you kind of grow up a little bit. So as a gymnastics professional my whole entire life, it wasn't until about 2015 where I wanted to come out of the coaching realm because I called it very addicted to coaching. It was my life. It's what I focused on. And in that time, my company was starting to go under. And that was because I was being reactive to my cash flow and not proactive to my cash flow. And I decided then and there that was enough. And I was going to take my addiction to coaching and put it into companies and running companies. And what does that mean? What do I have to study? I mean, I studied every rule and every biomechanic to produce these beautiful athletes, the psychology. What psychology do you have to run an incredible business that you're not being reactive to, but you're being proactive to? That at the end, you're not going to have to find $20,000 for payroll and payroll's on Friday. And it's a terrible state of living when you live your businesses like that.
It's like it's the same paycheck to paycheck almost mentality, but for the business owner.
Oh, and the stress. Oh, stress is incredible. So for all you entrepreneurs out there, if you can get a handle just on that particular piece and understand what a P&L is and what a balance sheet is, and the two differences of those simple. Everybody has them. You have to produce them. Your stress level, it is just an amazing thing. And when you want to expand or you want to buy more real estate or you want to do all these things, you have all these reports at your fingertips and it's done. And you can really have your stuff together by having simple things in place.
You're still in the gymnastics business, yes?
I am. Yep.
Okay.
I run it remotely.
That's awesome. I want to hear about that maybe a little bit more, but let's dig into the phrase that you've mentioned a couple times, reactive versus proactive.
Yes.
And you mentioned P&L and balance sheet, but what are some of the things that you really had to hone in yourself in order to become proactive and not react?
The biggest thing I had to do is study and find people who ran good businesses. I noticed when you're in a reactive state of running your company, you have a victim mentality and not an abundant mentality. And when you get yourself organized, because that's all it really is organizing your money as your tools. And once you get organized, you have a far more outlooking, forward-thinking, abundant perspective on your company. Where are we going? How are we getting there? And you're not living day-to-day operations, just, putting fires out, figuring it out. You still have that, but you have other people that can help with that. But no one is looking forward on your money but you as an owner.
This is so true. True. But let's assume you're in that position in 2015. You are in a reactive state. There is the $20,000 payroll coming Friday. You can study all you want, but payroll still has to be made on Friday. Yep. How do you climb out of that? Yes, via studying, but what were some of the practical things maybe you did to say, all right, I'm going to put this behind me. I know organizing your finances, but even so, if there's no money, you still can't organize anything, because if you're going broke, you're going broke. I mean, the ship's taking on water. How do you plug the leaks?
Well, here was the interesting thing is I wasn't going under so much as I thought. So I was just a little bit frivolous with the cash flow and how we were spending money. So what I did is I don't know if you've ever heard of Profit First. The book it's a great book anyway for all of you entrepreneurs. And I made my bucket and I opened 5 different, bank accounts, and one that was not in the same bank as my operational account. And every month, as soon as I got paid, all that money got divvied. Payroll, taxes, profit. I took the profit off the front of it, and emergency fund. And then whatever was left over could buy, a new bar, a new beam, donate money to a kid that can't afford gym, all that kind of stuff. So I had to do that and bucket the money for the company. And I do that personally and on every company that I own now. I bucket all the money and put it away. And then whatever's left, we can invest it. We can rehab a new building, whatever it is. Of course, that's not CapEx money in the gymnastics world. We don't really CapEx too much, but unless you own your building, but yeah, so that was the quickest momentum I had, and I was out of that situation within months.
Wow. Yeah. That's a powerful statement. That's a very powerful statement. So I'm gonna dig in here a little bit deeper, because this is a really just a personal curiosity.
Yeah.
You have the buckets for your business, and I know you mentioned them. What are the bucket names personally? Because ideally, maybe you do have payroll personally, but I don't know. What?
Yeah. So my buckets are still to today: operations, taxes, profit, emergency. Those are the 4 consistent buckets that I run.
Got it. I love it.
That company. Yeah.
That's very, very cool. And any other, you mentioned Profit First. You said studying, find those who run good businesses. Were there any other books that come to mind that really helped you in that situation?
Yeah. The Millionaire Next Door.
That's a good one.
It's a great book. It's about, management of your finances and not buying the $2,000 purses. That's not me anyway, but you also don't need the high level cars. And it's really a hard mentality in Silicon Valley to break away from, the cars in Silicon Valley. I would say it's not necessarily all the glitz and glamour stuff, because you have the guys that are millionaires in t-shirt and jeans, but it's the spending your money on high level educations for your kids. That's where a lot of the cash flow goes, is keeping up with the Joneses with education and sports and what activities your kids are in. And it takes a lot of money to keep up with that. Right.
Absolutely. Very, very cool. Let's dig into maybe some lessons you've learned running a business.
Yeah.
What are some things that you say, hey, this is a mistake I've made, or a valuable lesson learned that I could help other people either not repeat or repeat?
Sure. I think one of the biggest blessings and gifts that I have is people, and getting people to rally and getting people to want to run companies and want to perform for you. And if you can get and maintain good people, and people will say, well, no one wants to work. That's not true. No one wants to work. Okay, well, then maybe we're looking in the wrong place for those good people. And maybe instead of having that narrative that people don't want to work, I guarantee you, even this generation of youngsters, there are people that are hungry out there and they don't want to sit around. They don't want to sit in front of a screen, and they want to be active. They want to be with kids. If we take the gymnastics world still, they want to be around people. They want to be around kids and be part of something and grow and things like that. We are fully staffed and blessed. And that is I think that's because we have a different narrative that people are out there to work. You may not be able to just do it the same way we did 2 and 3 years ago to hire people. You may have to look or be boots on the ground and actually walk up to somebody and say, you have a great personality. We're hiring. Are you interested? Come on over. But it just looks different. You can't just put a thing up on social media anymore.
No, that you certainly cannot. When you say people, I mean, have you grown all of your companies on your own? Have you done this with partnerships? What does that situation look like for you?
All of my gymnastics clubs, well, this gymnastics club is 13 years old, and that one is solely owned by myself. My club before that, I had a business partner, and both clubs had about 25 to 35 employees.
Wow.
So we're currently running at about 30 employees right now.
Okay, cool. Is there when you think on partnerships, I mean, what is who said it? One, the partnership is the only ship that doesn't float. Something to that effect. And I don't necessarily agree with that entirely, because I've seen some great partnerships and great business relationships, and I have excellent partnerships right now even. But, what are some things maybe if you were looking back on that first gym that you owned and having partners, some lessons that you learned on that front?
So my first gym I owned was with a partner, was just her and I, and we became best friends, I would have to say. And she was older and I was her successor. And at the end, I was ready to come off from coaching. I was coaching at elite levels. I was gone every weekend, nights and weekends. And I had really gotten to a place where I just wanted to run the company. And she wasn't ready for that anymore. And a big lesson that I learned for all of you that get in a partnership, if you do not uphold your side of the contract, even if another partner does not, if you also do not, your contract becomes null and void, and you have nothing to work off of. So I learned that the hard way. And I do believe that everything comes with a gift, and it led me into my new venture with my other gym. But she and I ended up walking away. I didn't sue her. I didn't take any money, nothing, because I had been there for 17 years and I had built this incredible thing with kids and staff and parents. And I wasn't about to just put a knife in it, because it was bigger than just her. It was this massive thing that I had seen kids grow and now get married, and now some of them are having kids. So this was, they become part of your world. And I wasn't willing to, as angry as I was, willing to just pull the rug out from that.
Right.
So instead, I looked at it like, okay, a litigation probably costs $100,000, right? $100,000. And you could take that $100,000 and fight and be angry, or you can take that $100,000 and start something else. And that's kind of what I did. And I got some backers for finance, and they loaned money to me, and we built another one. And it was great. It was really great. Yeah. And now, back to partnership, you asked, like, people say it sinks. I don't believe that. I think people grow. So that partnership was a 17-year-old partnership. And the lessons I learned are invaluable. And for 16 of those 17 years, her and I were tight and close, and she gave me, opportunities to grow and do whatever I wanted with our resources. And that last year was our only tumultuous year. And it was there for a reason. It was there for me to move on, and it was there for me to start and learn a different way. And startup is not scary at all anymore.
That's fantastic. I love that. Thank you for giving the insight on that front. Let's talk transition into real estate. I know you talked, you bought a single family home, I think it was in 2015. Then you parlayed some of those profits maybe into some other investments. I know you said cabins in the woods. You just bought a resort in November. I mean, these are a lot of moving parts. Tell me what your real estate portfolio looks like today, why it looks like that way, and where you're taking it.
Sure. So I think COVID was a huge shift for me because my gymnastics club is in California, and they had us closed down for 18 months.
Wow.
And during COVID, you as the sole entrepreneur, you have to look at everything. Where do we do a strategic bankruptcy? Do we fight the good fight to keep the doors open? Or do we sell it pennies on the dollar? Or do we just kind of status quo and see what happens? So I met with my team of lawyers and CPAs, and I decided after our meeting that no, we're going to fight the good fight. We're going to keep this open. We're going to keep it open for the kids, and we're going to keep it open for these staff members that are so dedicated. And long story short, we ended up keeping it open. But as an entrepreneur, and I don't talk about it too much, but it really messes with your mind when you don't have control, right? Like in 2015, when you're trying to find $20,000 of cash flow for payroll, you have control. You screwed up running your company. This, you're not screwing up. This is not something that you've done wrong, and you don't have any light or sight of the end of the tunnel. You're like, holy, what am I going to do? So I decided there that I was going to just really focus on my real estate because my gym's closed. There's not much we can do. So I finished doing some Harvard education. Harvard has a real estate investment and finance certificate. It's fabulous. And I really dove into that. And in the meantime, the other thing that I did do is I took my cash that I had put away and I invested it. And because I didn't know, were we going to bankrupt, like strategically have to bankrupt. So I just shoved cash into investments and just kept shoving cash places because you don't know what was going to happen. And I was like, well, if the ship goes down because of COVID, I might as well have these other investments ready to pay out someday. So that's what I did. And then I got into, I was already working on that world, but I wasn't dedicated like COVID thrusted me into that world. And last year was our biggest year. It was awesome. We acquired a single family home. We got 2 GP positions in one in Dallas, one in South Carolina for, partnering up with a couple of people. And then we acquired the resort in those 12 months. And that was fun. That's when it really becomes fun.
That is definitely when it really becomes fun. Congratulations on making 2022 a killer year. Tell me about the resort. What is it? Why did it attract you to it? What's the upside?
Yeah. So I mentioned to my mentor up north, and he's offloading his portfolio, and I've turned a couple of those projects into short-term rentals, and they weren't paying off. So I ended up making those long-term rentals because there's a housing crisis where they're located. And there's a place called Brainerd, Minnesota, Brainerd Lakes area. And it's kind of a high end, almost like the Ozarks, I think, from in Missouri. You have the high end, you have the low end, you have everything in between. And you have golfing and resort life or fishing and lakes and recreation. And it's only 2 hours from Minneapolis. And I was looking to enhance our short-term portfolio. And this resort just came up, and I thought, no restaurant, no bar. I didn't want to manage those, but it has 300 feet of shoreline, docks, boats, and 16 cabins. So I threw my hat in the ring, and we ended up, they accepted our LOI. We're 3 people on the table, and we ended up doing it. One of the biggest things that I got creative with is I knew the pain point of the seller. They were burnt out. They didn't want to do this anymore. And I offered, as part of my earnest money, to drop everything and come and close out the season with them. And that was the tipping point. And that's what got us the deal.
Wow. That's a really creative solution, I would say. I mean, how did you come up with that? I mean, obviously you heard from the seller at some point. You heard from them or sensed from them that they were done.
Yep.
What gave you that idea?
Yeah, we had the same realtor, so I was able to get a little insight on the story. And this resort's been around with the same family, 3 different generations of the same family since 1938. And my business model, when I threw the LOI in, was key codes on the door, Airbnb, everything's on one spot, right? super easy. I've done it a million times. It's hands off, get a cleaning service, got it. I knew the business model. I knew how to do it. Well, when you go and you work it, and you find out families have been coming for 50 years. One family's been coming for 80 years, 30 years, 10 years. We have a family who's left a chunk of cash in their will so that their family can come for 10 more years after they pass. You went, okay, hold on. We have to rearrange our business model. Because I'm not willing to pull that rug out. I wasn't willing to do that. I want to know what that means. What does it mean that somebody's dedicating their family vacation for 30 years straight to the same place?
Right.
80 years straight for the same place. So we didn't change the name. We kept the name. We kept the website. We upgraded a little bit. We put everything online. They were doing pen to paper. And, we're going to update some of the cabins. They're still a little bit in the 70s and, 80s. And we're going to just kind of upgrade as we go along. And so far, it has been amazing. I have had so much fun doing this project.
That's awesome. And the outdoor hospitality space is, it exploded with COVID, and it shows no signs of slowing. I'm involved in that space as well. And we couldn't be more excited and happy to be in it. Erica, we are at the end of the time here.
I had so much fun talking.
I had a blast. Thank you for coming on today. Certainly enjoyed all this. I got like 500 more questions for you, but we're completely out of time. So if our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, Erica at Maroon and Gold, maroongoldre.com is my email. And then maroongoldre.com is our website.
Fantastic.
You can get to the resort and see our portfolio from there as well.
I look forward to it. I'll check that out. Erica, thank you again for coming on the show today. I certainly appreciate it.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.